exceptional pressures on the global economy and financial system, the damage caused by a default by Bear Stearns could have been severe and extremely difficult to contain. Moreover, and very importantly, the adverse impact of a default would not have been confined to the financial system, but would have been felt broadly in the real economy.
Indeed, another Fed official said at the hearing that the average American would have felt it in his or her pocketbook. We would have seen our savings, our investments take a hit if this deal had not been done. Jerry?
Well, Alan, come on. You know, you bail out one investment bank. Aren't you going to end up bailing out the rest if they have problems?
That's what they call the moral risk. The Federal Reserve Chairman is saying he does not, absolutely does not want other bankers, other investment bankers to think that they can take big risks and that Uncle Sam will just come and bail them out. He's saying this is something that he hopes will never, ever happen again, and it really was an extraordinary move.
Well, we all hope it wouldn't happen again, Alan. But is it possible taxpayers could lose $30 billion?
The chairman of the Fed is saying, yes, we put $30 billion, and now it's been revised to $29 billion on the line, but he's saying we will not lose that much money. He's saying we have collateral here. What we have are securities that Bear Stearns had actually purchased, many of them mortgage-backed securities that nobody seemed to want. But he's saying over time, these securities should have their value. And he even said yesterday they might even gain in value. But, of course, we'll have to see about that one.
We will indeed. Alan Chernoff, thank you for that.
All right, well, Ben Bernanke isn't ready to say that the U.S. is headed into a recession. Some people are saying we're in a recession. Some people are using even stronger terms like economic collapse. Peter Schiff is the president of Euro-Pacific Capital. He's the author of Crash Proof, How to Profit from the Coming Economic Collapse. He joined us from Stamford, Connecticut. Peter, a good name for a book, probably sells a lot of books. First of all, do you really believe we're headed toward economic collapse?
I do. I think everything that I forecast in my book that I wrote over 2 years ago, came out last year, is happening right now, and it's going to get a lot worse. You know, Ben Bernanke, first of all, he's lying. These securities are securities that J.P. Morgan wouldn't touch with a 10-foot pole. They don't have $29 billion worth of value. That's the problem. If they really were good collateral, then Bear Stearns wouldn't have gone bankrupt. And, you know, this is a bailout, not just for Bear Stearns shareholders, but more importantly, for Bear Stearns' creditors. And the Fed is interfering with the free market. People need to know that if you loan money to investment banks, if you loan money to hedge funds, and they do very risky things, you might not get your money back.
What happens if you loan money to people for their mortgages and they can't pay that back? Does somebody in that equation get bailed out?
No, they shouldn't. I mean, the problem is real estate prices are too high. That's why there's all this risk in lending. How did they get too high? It's because of Alan Greenspan and now Ben Bernanke. They kept interest rates much too low, and they inflated the housing bubble. This housing bubble and the collapse is not a failure of the free market. It's a failure of government, and government artificial interference in interest rates and in the money supply. And, you know, Ben Bernanke said he wants to prevent the public from losing. He can't do that. You know, we got into this mess again because the Fed didn't want the ramifications from the bursting of the tech bubble to hurt the overall economy. They blew this housing bubble up. Everybody's going to get hurt. And you know what? The bailouts are hurting worse.
Bottom line here, Peter, though, is that, you know, you and I may have been responsible borrowers, but if there are foreclosures around us in our neighborhoods, in our towns, the tax base goes down, our property value goes down. So we're all affected by this one way or the other.
Remember, but there's no way to stop it. The property values were artificially bid up by this boom, by the lax lending standards. They have to go back down. We can't live in the illusion that our houses are worth these crazy values. They're not. And it's distorting the economy. Meanwhile, Ben Bernanke is creating all this inflation. There are more losses because of what he's doing. Inflation is not being caused, like he said today, by rising commodity prices. He's the one that's causing commodity prices to rise by these low interest rates and printing all this money.
All right, and the average American, wheat and corn and things like that, that's not the Fed that's doing that. That's world demand that's causing. Well, no, it's not. Wheat is not because of the Fed. I mean, that's,
yes, it is.
It's not.
Because the demand is from the money that we print. Global output of commodities is rising.
All right, tell me how you make money. Your book says how to make money from the coming economic collapse. What do our viewers do to actually capitalize on this? Like, you made predictions that are true. What do they do now? What's your next prediction?
They have to do is get rid of the currency that Ben Bernanke is debasing. They need to get rid of their U.S. dollars, sell their U.S. bonds, cash in their CDs, and get their money invested abroad, own Swiss francs or euros dollars or New Zealand dollars, invest in other countries, buy gold, buy commodities, buy the things that are rising as a result of what the Fed is doing, and protect your wealth, because it is under attack right now from the Federal Reserve, and it's going to get worse.
Gold's a little under $1,000, but it's still been in that 900 to 1,000 range. You don't think that's too late to get in? You think people should still do that? And I guess for our viewers, that would mean buying an exchange-traded fund or some sort of a mutual fund of gold.
Exactly, or you can buy the physical metals, you can invest in mining stocks. I think gold will be several $1,000s an ounce. You know, it has risen from under 300 to over 1,000, and, you know, the entire time this rise has happened, the Federal Reserve has been diminishing it or saying it's not going to last. Again, Bernanke testified today that he expects commodity prices to fall. The Fed's been saying that for 8 years, and they've been wrong for 8 years because they continue to create inflation, and if they keep debasing the money, prices are going to rise, and American citizens are going to lose.
Peter, thank you for joining us. Peter Schiff is the author of Crash Proof, How to Profit from the Coming Economic Collapse, and the president of Euro-Pacific Capital.